Hello and welcome to the Wealth Index channel, your one-stop shop for enriching not only your bank account but your mind too. Want to develop a healthy relationship with your finances? Then keep watching. We are here to build a financial wellness community that will not only change your life, but for everyone who wants to see a better version of themselves. This is your space to learn new and exciting topics that can help you improve your life. We are here to spread the word about the beauty of taking care of your finances to make money work for you and not vice versa. Our previous video discussed Dependent Care Assistance Programs or DCAPs, contributions to qualified accounts such as 401ks, IRAs, and HSAs, and how to lower your taxes using debt. This video will discuss deduction reduction, additional tax strategies, and real estate. Are you ready? Let's go! Our third strategy lies in deduction reduction. Tax laws may impose limitations or phase outs on certain deductions based on income level, filing status, or other criteria. These limitations can reduce the number of deductions you can claim or gradually phase out the benefit of deductions as your income increases. For example, some countries have an income-based phase-out for itemized deductions, where the total amount of deductions you can claim decreases as your income surpasses a certain threshold. This reduction in deductions may result in a higher taxable income and potentially a higher tax liability. Additionally, specific deductions may have limitations or rules restricting your claim amount. For instance, certain write-offs may be subject to a percentage limit based on your income or have a maximum dollar limit that you can deduct. One thing you can do to file your taxes easily is to visit Free Tax USA, an online tax preparation website owned by TaxHawk Inc. Founded in 2001 by a CPA and a team of professional software developers, Free Tax USA is one of the fastest growing tax websites online today. Free Tax USA lets you e-file your federal tax return, no matter which IRS forms or schedules you need, at no cost. A state return will run you $15. An additional optional $8 will cover a deluxe add-on that includes live support, amended returns, and audit assistance. The fourth way is to devise a tax strategy. The best tax strategies depend on your specific financial situation, goals, and country's tax laws. Engage in proactive tax planning throughout the year rather than waiting until tax season. By monitoring your income, expenses, and potential deductions, you can make informed decisions to optimize your tax situation. Strategically manage your investments to take advantage of capital gains and losses. Consider selling assets with capital losses to offset capital gains and reduce taxable income. Be aware of any specific rules or limitations related to capital gains taxes in your country. One good thing to consider is to donate to eligible charitable organizations. Charitable contributions are often tax-deductible, providing both a tax benefit and the satisfaction of supporting a cause you believe in. Keep proper documentation, such as receipts or photos, to substantiate your donations. For companies, this is what they refer to as corporate social responsibility. Think of it as a way to give back financial blessings to the less fortunate or neglected areas of society. You can always look at tax-efficient investment strategies too. This involves investing in tax-efficient mutual funds or utilizing tax-efficient investment accounts. These strategies aim to minimize the tax impact of investment income, dividends, or capital gains. You can also develop a comprehensive estate plan to manage and minimize potential estate taxes. Proper estate planning ensures that your assets are distributed according to your wishes while reducing the tax burden on future beneficiaries. The fifth and final thing to know in reducing your taxes is to make the most out of your properties. Renting your property is another option to minimize taxes. Why? Because mortgage interest, property tax, operating expenses, depreciation, and repairs are all part of rental income expenses. If you have a mortgage on your primary residence or qualified second home, you can deduct the interest paid on your mortgage loan from your taxable income. This deduction can significantly reduce your tax liability. However, checking your country's specific rules and limitations is essential, as there may be caps on eligible mortgage debt. Property taxes paid on real estate properties are often tax deductible. You can claim deductions for the property taxes you pay on your primary residence and any additional properties you own. Keep records of the property tax payments you make throughout the year to substantiate your deduction. Rental properties can provide tax advantages through depreciation. The value of a property is typically depreciated over time, allowing you to deduct a portion of its value as an expense each year. This depreciation expense can offset rental income, reducing your taxable income from the property. However, it's essential to understand the specific depreciation rules and consult a tax professional to ensure compliance. In certain countries, including the United States, a 1031 exchange allows real estate investors to defer capital gains tax by reinvesting the proceeds from selling one investment property into purchasing another like-kind property. Utilizing a 1031 exchange can defer the tax liability and grow your real estate portfolio. Suppose you are actively involved in real estate activities as a professional. In that case, you can deduct losses from rental properties against your other income without the limitations typically associated with passive activity losses. This could reduce your overall tax liability. Owning rental properties can also help you deduct various expenses related to the property, such as property management fees, maintenance and repairs, insurance, utilities, and more. These deductions can offset rental income and lower your taxable income. Meanwhile, if you are self-employed and use a portion of your home exclusively for business, you may qualify for a home office deduction. The great news is that this deduction allows you to deduct a percentage of your home expenses, such as mortgage interest, property taxes, utilities, and maintenance costs, based on the square footage of your home office. Now that's a hack! Consulting a professional is a surefire way to become successful in paying fewer taxes. Have a trusted accountant and tax expert to help you decide on crucial financial steps. Having professional advice keeps you grounded and stay informed. Tax laws and regulations are subject to change, so knowing about updates that may affect your tax situation is relevant. Consulting with a qualified tax professional or accountant familiar with the tax laws in your country or jurisdiction can provide personalized guidance based on your specific circumstances. Remember, tax strategies should be implemented within the framework of the law, and it's essential to comply with tax regulations. Consulting with a tax professional or accountant can help you make informed decisions and optimize your tax situation effectively and legally. Additionally, tax laws and regulations can be complex and vary between countries. It's essential to consult with someone knowledgeable about real estate taxation in your country to ensure you understand the rules and make the most informed decisions. Quick recap. If self-employed, write off as much as possible, such as home office expenses, equipment purchases, business-related travel, or professional development. If employed, take full advantage of pre-tax workplace benefits, such as FSAs, HSAs, and DCAPs, which let you set aside pre-tax money from your paycheck to help pay for qualifying childcare or elder care expenses. Contributions to qualified retirement accounts, such as 401k and IRA plans, allow you to set aside money from your paycheck before taxes, potentially reducing your taxable income. Tax laws may impose limitations or phase-outs on certain deductions based on factors such as income level, filing status, or other criteria regarding deduction and reduction. Always research based on your income level to get the correct information. Another way is to maximize your write-offs on your rental investments. Whether self-employed or employed, rental properties depreciate over time, allowing you to deduct a portion of their value as an expense each year. Mortgage interest, property tax, operating expenses, and repairs are things to write off. Finally, gather the information and put together a devised tax strategy. The best tax strategies depend on your specific financial situation, goals, and country's tax laws. Take small steps throughout the year. When tax time rolls around, it will be less stressful. If finances permit, consider donating to eligible charitable organizations. It is a nice additional write-off and makes you feel good all in one. That is a win for both parties. And we have reached the end of our video. But of course, ways to lessen taxes are more comprehensive than what I just shared. Just like you, your financial situation is constantly changing. What are the tips and tricks that worked for you? Do share them in the comment section down below. Once you have mastered this, you can conquer your financial goals. And as the Wealth Index channel, we are here to help you every step of the way. Sure, managing your finances is quite challenging. It is part of life. Always be mentally strong to overcome challenges and achieve your desired outcomes. Benjamin Franklin said, "In this world, nothing can be certain except death and taxes." This has remained the same since he penned those words more than 200 years ago. Filing taxes may seem daunting when starting your journey to financial freedom, but learning the tricks of the trade can help you navigate the labyrinth of paying taxes in no time. If you have any thoughts on the topics discussed in this video or any suggestions, leave a comment below. For more videos on wealth-related topics, just smash that like button and make sure you subscribe because your life depends upon it. Thank you for tuning in to the Wealth Index channel. Stay positive. Peace.